Hi, welcome back once again. In the previous videos of small cap multibaggers, you have seen Richa talk about rebound opportunities in small cap space. However, a lot of investors are still waiting for that to happen. To answer these questions and more, we have Richa once again with us. Richa, thanks for joining in.
Thank you for having me here once again.
Yeah. So, Richa, as I said, in previously also many times you have mentioned about the rebound opportunities and the unreasonable divergence between Sensex and small cap index. So, what and since last time we spoke, the divergence only seems to have increased. So, what are your views on that?
So I still stand by my view that that there's no margin of safety in so-called select safe stocks that are actually rising higher and higher. The reason why the markets are still going up is because there's a lot of liquidity chasing these particular stocks and the aversion of big investors to the small cap and mid cap space. Uh, these stocks are going up without enough earnings growth support. And on the other hand, there are select stocks in small cap space. I cannot comment on the index itself because there are thousands of companies in the small cap index.
Right.
But there are select quality companies where the earnings have grown, like I mentioned in my webinar to my subscribers, where the earnings have grown in the last 4 to 5 quarters, and yet the valuations and the stock prices have suffered. So I think that in future these stocks will be the real driver of returns. So whatever changes are happening in the economy, be it IBC resolution, or seeking resolution to the NPA crisis, or GST or RERA, I think a lot of small caps companies that are market leaders will actually gain market share further, and that will increase the scope of the earnings growth. And I think that the point is not lost on the big investors, because sequentially, if you see, there has been an increase in the institutional stake to small caps. uh, I think around 15 stocks in Hidden Treasure itself have seen a sequential increase in the institutional holdings. So this could be a turning point for the small caps, and the wait might not be too long from there. Having said that, people who are interested in the small cap space should have a longer term horizon. But whether it is from an earnings growth perspective or re-rating perspective, I think that they are placed at a very sweet spot right now.
Okay, so is there any particular sector that you're positive about?
So in Hidden Treasure, we don't have a sector specific approach. We are sector agnostic. We pick up stocks from a bottom up approach. Having said that, there are quite a few stocks from the IT space, under our recommendations currently. So this particular IT space is mid-tier IT space with market cap between 20 billion to 50 billion, where the stocks have seen a sharp correction. And this has been on account of two factors. The first is the correction in the small cap space, and the second is that there are sector specific factors, for example, the appreciation in rupee in the last 1 year. Then shift in the client's focus from reducing cost to seeking solutions, that has led to an increase in the employee cost for IT companies, uh, inducing pressure on the margins. Having said that, I think a lot of negatives are already priced in the correction right now. Most of these companies are very strong from a balance sheet perspective and a cash flow perspective, and they have very attractive dividends, and the buybacks are being carried out at a premium. So I think from a next 2 to 3 year perspective, the upside in these stocks could be as high as 70%.
Okay, that sounds good. So, Richa, last week I know you have recommended a stock in your small cap service Hidden Treasure. So, I know that you cannot name the stock, but can you give us a sneak peek into what kind of opportunity is it?
So this particular stock that we recommended last week to our subscribers is from the PSU space. Now PSU stocks, as you know, do not gain much favor with the markets, and most for the right reasons, because the autonomy is very little with the management, and the execution is very sluggish. But this particular stock, I believe, is an exception because it is as well run as a private company, and this can be seen from the earnings growth and from the cash flow growth of the company. Despite the fact that it distributes more than 50% of the dividends, the earnings growth has been strong. And if you look at the current order book, there is a strong revenue visibility, and we expect the earnings to grow at around 16% year on year for the next 3 years. And the valuations are also very attractive, so that's why we have asked subscribers to take an exposure to the current stock. And the stock is still available, in the buy zone.
Okay. So, thanks, Richa, for taking out time to speak with us. So, guys, thanks for watching the video. Meanwhile, you guys don't forget to click on the notification bell and subscribe to our channel. Thank you.
Thank you. It's always a pleasure.